What is going on? Welcome back to Financial Journey. So today I got Tanner from Future Investing with me. We're going to be talking about SoFi. So we're going to be talking more so about that touchy subject of reverse split, what that may or may not entail. We're also going to be talking about new products and also SoFi's future growth. But this is going to be a little bit more of an open forum, so it could be talking about anything. But if you have any questions or anything like that, don't forget to leave them in the comments below, and also to Tanner's channel. The link is in the description below. So make sure you pop over there and subscribe. He has amazing content for SoFi. He is a go-to individual. So definitely pop over there. But Tanner, thanks for coming on.
that was a nice intro. I appreciate that.
Sweet.
Yeah. So first of all, if you just want to jump into the touchy subject of reverse stock splits, or maybe we want to talk about something a little bit less aggressive, maybe into Morgan Stanley's latest interview that they did with Anthony Noto. I don't know. Have you seen it, Cal?
No. Was that through the conference?
Yeah, exactly.
Yeah.
So there was so many things that they spoke about in that conference about new products that got me pretty jazzed up, like SoFi tax planning, which what they're thinking about coming out with next, or SoFi insurance. They spoke about bringing, they already said that they bring over, in terms of auto sales, home and life insurance, they bring over $250 million worth of insurance premiums just through the referral links. If they could be the actual benefactor of that, that could be huge for SoFi. Right.
Yeah.
And so they're thinking about actually getting a potential, SoFi insurance going. Obviously, there's lots of licenses for that and to get that done properly, but still, it's another big growth area for SoFi. And I'm really, really jazzed up. I don't know if you've seen anything like that, or SoFi Plus. That's going to be pretty big as well.
No. I noticed that they were talking on a lot of different products that mostly is going to be coming out the tail end of the year, though. So
yeah,
future other additional credit cards, mortgage. There's a lot of good things. And yeah, you're right. That is, for instance, if you guys haven't taken a look at that, I highly recommend listening to that. It's very informative. So if you know nothing about SoFi, if you just listen to that, like, it gives you a good concept of what they're kind of forecasting for the future and things that is coming down the pipeline. So what other things did you see, or for instance hear from that that caught your eye?
You know what? I didn't know if it was from that conference or the one that Chris Lapointe did, who was the CFO of SoFi. But he actually brought up, the delinquency rates and the charge-off rates for the company, right? And talking about how they're at all-time lows right now, and how they have some of the best margins in the business right now, because they're, they have really high income clients with really high FICO scores. So they pay their debts off. And that's super important, because it's not only that, being SoFi, that we get our bills paid off, because that's a great benefit, but also most people don't realize that these large banks don't hold on to their loans forever, right? Like, if they have a mortgage or a loan over the course of a couple of years, they really only hold these loans for about 3 to 6 months before they sell it to another institution that's looking for a fixed income product. Okay.
Yeah.
That's called securitization. Obviously you know that, but yeah, with these delinquency rates being super low, we can actually charge more for our fixed income products. And that's just another benefit to SoFi going down the road. And because we're now a bank, we can actually hold the loans for longer, which brings up our net interest income, which just allows us to, it's just, really bringing out the holistic planning of what this bank charter really should be doing. And these latest conferences have just shown that even more, that we're compounding off the effects of this bank charter that we just got. And, that I don't know if you remember, but whenever we actually got that, bank charter back in January, the price of the stock rose like 20 something percent, if I remember, the day that announced, and it went up to like $14. And now all that's erased. So you can get SoFi now with all the benefits of the bank charter without, with the price being less than half, almost a third of what it was whenever we actually got the bank charter, which is where I actually believe maybe, the price of the stock should be around, the $14 area.
Well, just minor while we're on that topic, in relation to the market share price, where, like, do you think it's justifiable that we dropped as much as we did? And if so, because I know there are some people, I've touched on it in some videos and people come back saying it's incorrect. Why do you strongly feel that it's gone down as much as it has?
Yeah, there's a lot of things that have happened to SoFi that have been bad. I may be it, on the more bearish side of what has happened to SoFi. But the thing is these things like student loan pauses, they are terrible for SoFi. And I understand I'm not one of these people that think it's just a student loan business, but it is a huge segment for us. Okay. And it did hurt a lot. The thing is that is it worth the drop that we saw in the price of the stock? Okay. So yes, we did see pain, real pain, fundamental pain, but is it what we're actually seeing reflected in the price of the stock? I don't think so at all. So I'm still buying heavily because I think we're overselling at this point. And I think that we're seeing so many catalysts that are positives, like the bank charter, that are going to outweigh these problems that we're seeing with things like, student loan pause extensions. And, we're also seeing, I don't have the numbers in front of me. I'll have to bring them up, but also, numbers in like our home loans actually going down year over year, which aren't great, which isn't great news, right? But there are a lot of great things that should actually propel us even higher, like just, the total amount of member growth, as well as our product cross-selling that just should propel our business even, further. Continuously, raising our guidances. We were one of the very few companies this Q1 to actually excel on our numbers for this quarter and then push our guidances. We were in a very small category for, companies that came out this positive, and look at what's happening, what's reflected in the share price. It's just, I don't think it's correlated.
Yeah. And similarly to that interview, you can kind of tell Anthony's how he answered the frustration about the student loans as well. So you're right. It is one of those things that, unfortunately, it's one of those things that's been constantly dragging it down. I think in addition to that, though, not a lot of people are talking about, obviously, with raising interest rates, in theory, should benefit SoFi. But in general, though, they do have a substantial amount of debt. That's one thing I've been bringing up. I feel like a lot of people don't necessarily talk about that. Mm-hmm. But I guess that's, in my opinion, at least, not really that because I believe most of their debt is 2025-ish. I haven't really fully looked at. Have you looked at a lot of their financials in debt, like detail for debt wise?
Honestly, I don't often. What I look at, especially in a company that is, a financial services company, is are they able to stay at a positive ratio based off whatever their interest rates that they have to pay versus what they're charging to their consumer. If we can stay positive, those debts are going to go down, right? How much are we actually paying to, actually acquire new customers? And for SoFi, it's unbelievable right now, at least of the last quarter. I think it was somewhere like in the highs of like $800 per user. That's a scary number, but with so many catalysts, I hate keep bringing back to the bank charter, but I think it was a bigger deal than what a lot of people are bringing up. It was like a catalyst back in January, so people don't worry about it, but it's coming into effect now, right? And these sorts of things are going to add so much, how do I even say this? Like, stress off our backs. And I think that what was a debt issue will no longer be, because I think there's profitable quarters ahead. And it'll be a matter of just slow debt payoffs over time.
Yeah, and I agree with you. I think like SoFi is going to kind of encumber the same scenario how Netflix came into the kind of business. It's just, regardless of, because based on SoFi's financials, they've shown substantial growth, continuous growth.
Yeah.
But I think one thing that they're going to really focus on, which went through Netflix, is just customer growth. And so far it's been fairly good, but I think that's going to kind of constitute which direction the price will go. That's going to be continuously ongoing for their financials. But that's just something I think behind the scenes, psychologically, a lot of investors are going to be really watching for. Because you're right, that hands down, like the charter news is that's should, in theory, unfortunately, we were kind of in a little bit more of a starting downtrend, but take that downtrend out. If we were in a nice bullish market, we'd be at 30, 40 possibly right now. But yeah.
So do you think that, we mainly have to focus on more of a cash flow issue? Obviously it's a financial services company, but still, profitability is going to be the name of the game in this market. And so, regardless of our growth rates, it's still not going to reflect in the share price.
Unfortunately, yeah,
Yeah.
to some degree at least. That's kind of how I've been, like, that's my interpretation of how things are going, because right now you're right, there's been a hell of a lot of good news for SoFi. Just it just seems like, oh, that's just a February, that's just a January catalyst, that's just good news. Like last week, we like
Sure.
investors like in 2022 and probably even 2021, very, very short term like mentalities. Like, whereas SoFi is going to do a lot of good things, especially based on all their acquisitions. So they're going to be making a
Right.
huge difference 2025 onward. Like that is when you should be having your goal for, not like 6 months
Yeah.
out, 2 months out. Like, but I agree
Yeah.
with you.
Yeah. And I think that's something that people should know as well, is just like, and I I don't know what your time horizon is for this stock, but mine's extremely long, right? I I'm not buying this stock to then worry about where we're going to be in 6 months. I don't care at all, especially for things. Maybe this is a good transition into something like the reverse stock split, but it, these catalysts don't bother me. Like, I mean, they're more of a be worried within the next 3 months sort of thing. I think there's definitely some pressure. I think the stock will go down if we actually do a reverse stock split, let alone if the vote actually comes back, July 12th, and it says that we are going to do a reverse stock split. That doesn't even mean that we are. That just gives them the authorization to do so within the next 12 months. If, like what Anthony Noto said, a break in case of emergency, which in my opinion is if they fall below that $5 mark, right?
Yeah.
Um,
So
but
are you in agreement with that? Because I've done, like I said, a couple of videos about that, and even that I get supposedly called out on. So is it like I've been under the interpretation, yeah, if it breaks below that $5 mark, then it's considered a penny stock to a lot of institutions, thus changing the investing style that they can't. I think it's 10 consecutive days, give or take, that they have to be below that $5 mark, which is basically what SoFi is trying to avoid. Is that what your interpretation is on that?
Yeah, 100%. So it's not that hedge funds can't invest in penny stocks, right? There are definitely institutions that can. It's a lot of the mutual funds and ETFs that set strict objectives, right? They can only invest in certain guidelines. And so regardless if SoFi hits 9 out of their 10 guidelines, if one of them is no penny stocks, then they can't invest in them, right? And it's this weird arbitrary number. I think a penny stock should go off the market cap. I like with
Yeah.
fractional share trading and everything along these lines, there shouldn't even be a share price. I feel like it should just go off the market cap and then you can buy as much as you want. But yeah, so it is this weird system where we might have to do a reverse stock split just so then our institutional buyers, and not all of them, but definitely a large percentage of them, can still buy into our company, or give it to their clients without having this extra layer of disclosures, because this company is a risky asset.
Yeah, which I know about the risky asset. Currently, I think there's about 195 million shares being held by strategic entities. And I think it's those strategic entities, because part of that stipulation as well is that once it breaks below that $5 mark, you cannot use any margin whatsoever, which
Sure.
most of those strategic entities obviously use a significant amount of margin at least. So I think that might come into a little bit of a play. But are you worried about that? I think you kind of already touched on that a little bit, but is that something that you would think that someone should look into?
I don't care. I don't care about the reverse stock split. It's something that's going to happen. People are going to freak out for 3 months. Okay. And in that time, I'm going to be buying a lot more, because this company will not go broke if they're continuing to grow at the rate that they're growing. There might be a buyout. That might be the scariest objective. And some company might take this company with a full acquisition at $10 a share, something that maybe is the price that I would not ever want to happen. That might be the scariest thing to happen. But I think I did a tweet about this, but like, all bad companies that are dying do reverse stock splits, because it's this maybe a key way to sort of get out of this. But not all reverse stock splits are done by dying companies. It's not necessarily always equal, right? You look at a company like Citigroup, which has done a reverse stock split, doing perfectly fine. Warren Buffett bought it a couple months ago. it doesn't always mean that it's a disastrous thing to happen, right? Or in future to happen. I think it's maybe a catalyst that people didn't really anticipate with the SPACs that are coming out, right? Pricing them at $10 a share and saying that, hey, we can't have a 50% drop or else we're going to be a penny stock, right? So that is sort of a new part of this equation, is how popular the SPAC 2.0 has become. But yeah, I don't care about a reverse stock split. If it's not fundamental, I think you're a big, if I've seen, you're a big TA guy, like a technical analysis.
Yeah.
I don't do it, but I'd love to hear what you have to say about it. But for me, I just look at the growth rates and I really like what I'm seeing, especially in a couple of things that I want to cover as well. But yeah.
Yeah, no, more so on the technicals. I think SoFi has been still similarly, like a lot of growth stocks have been all hit the same in kind of in same ways. Just SoFi has little hints of just doing a little bit better. You can tell that they're seeing a little bit more of a float. There is a lot more institutional purchasing as well, more so as well from like dark pools, and shows that there is a lot more significant value in SoFi versus a lot of the other stuff that's been completely slammed out there. So which I think kind of cycles back to the pretty much the points that you were bringing up about exactly how much benefit SoFi has in the future. And that's literally the whole thing why institutions want to own it. But I do have actually a question for you, that since you brought up a takeover, can they physically be taken over? Do you know, with being a chartered bank, is it that simple that, let's say, Walmart wants to come by?
Well, I don't even know if it has to be a Walmart. It could be a JP Morgan. Like, can a chartered bank, acquire a chartered bank? I don't know that law. I don't think Walmart could step in. I'm sure that they would have to go and physically get, all the regulations that SoFi had to get for acquiring Golden Pacific Capital. I think that was what Golden Gate.
Yeah.
You know what I'm talking about. So, but I'm worried about a bigger bank. They're already acquiring shares like crazy. Bank of America. I don't know if JP Morgan. I know Citigroup. I have to get better notes in front of me.
Morgan Stanley, and and all those are the same ones that gave downgrades. It's kind of funny how that's working out.
Yeah, exactly. I covered that in one of my videos, how they'll downgrade them to like $7 and then acquire 3 million more shares. Yeah, it's ridiculous. But those are the people that I'm worried about, coming in and picking up these types of stocks. I think JP Morgan has like 50,000 technicians working for them to try to, make their technology a big part of their business. It's, why are you paying such a crazy amount, in terms of salaries to try to set up your company in a digital way when you could just buy something like SoFi and build off of it, right?
Yep.
Get the infrastructure laid out with all these new members, clients, everything along these lines, great loan business, and, not have the fuss of paying just such a crazy amount out to all these, incomes.
Which I believe SoFi is even their book value. Isn't that like 480 or something like that? So like we're basically almost at there. Like, that's, given the circumstances, even as much as we've been hit so much, like I don't think there's that many other growth stocks that's in that same kind of discount level.
Yeah. It is it's pretty gross considering how much we're growing. Like, and there are definitely some things, like I don't like the way that Galileo is growing. I know a lot of people are saying that it's doing amazing. I've got some qualms about it. But member growth, product growth. What I'm worried about is in the coming quarters, whenever you compare member growth to another institution, a member is not just a member, right? You have to understand that a company like Current and how many members that they have, their audience is extremely young, okay? Versus an audience like SoFi, which has an extremely high average income, right? In my opinion, our clients are worth a heck of a lot. And so to be growing at this rate and still bringing in, these insanely high incomes, high FICO score clients is just unbelievable. But, the same, like the problem is going forward, are we still going to be growing in that same space, or are we going to start like increasing our risk and lowering, what we're looking for in terms of our FICO scores and these sorts of things.
I
That,
think, well, this
yeah,
is more of a tangent, and to be honest, I've never really thought more than other than this, just speaking out loud. I think given the market conditions, I think a lot of companies to continue its expectation for member growth, they might have to lower their expectation
yeah,
to some degree. I don't know, maybe you disagree, but I think obviously we all know markets always changing, and if you don't adapt, you are going to be left in the dust, especially with techno like SoFi's innovation and what they have to offer. I don't think they can afford not to continuously adapt and try and like do what it takes to get those customers. My own
right.
2 cents though.
Yeah, yeah. I wanted to clear up just so then people don't come bite my head off about Galileo's growth. Um, you know, I maybe you can bring it up, or maybe I can send you a link really quick. But whenever we actually look at how much they're growing year over year, you can see that they're growing at amazing rates. Although slowing, it still is great. Year over year. I think it was 58% this year is how much they grew year over year. My problem is their revenue only grew by 32%. Okay. That sounds amazing. I would love any company to grow at 32%. The difference between 58 and 32% is a big deal for me. Because they said that it was a lagging indicator. Revenue was supposed to be this lagging indicator from, so meaning they sort of give free trials for the first little bit. Okay. And it might take a little bit of time before we actually start making higher amounts of monetization on those clients. So you'll see that 58% later on. Okay. The problem with that is that, and how long is that delay? Is that a 3-month delay? Is that a 12-month delay? I don't actually know that. My problem is Galileo's growth rate now is at some of the lowest rates that it's been compared to year over year. Year over year is growing in the triple digits, high triple digits. So if anything, the revenue should be higher than the account growth, because if it is a lagging indicator, we should see this swarm of large amounts of revenue from those accounts. So how are we where, in previous quarters and in previous years had such higher growth rates brought down such lower revenues? Are we charging less to the client? Or are we lowering our take rate? Or I don't know what it is. Is the competition getting so strong in that area where we just have to completely obliterate our take rate? That is my concern,
Yeah. Yeah, that's actually a real thing to talk about. And to be honest, I've done a lot of research, and actually you've brought up a lot of good points that not many people really focus on.
Yeah. Yeah. It's definitely not one that I hear people talking about, because, large growth rates are large growth rates, but you have to make sure of what you're paying for. If a company
Yeah.
grows at 40% year over year, that's great. If a company grows at 80% year over year, that's great. But one is twice as good as the other, and that's going to completely change the margin or the multiple for how much you're paying for this company. So if that is the case, if a company was previously growing at 40 and then goes down to, or previously growing at 80 and then goes down to 40, there is cause for the stock to cut in half. Now, obviously, there's so many reasons that make up a valuation in a company, not simply just a growth rate. But, just looking at high numbers just doesn't quite paint the picture that we want to see.
Yeah.
You know?
But wasn't it a little bit more yeah, you're right. That's I don't necessarily know. I did have some other individuals on here to collaborate with, and
Yeah.
they were here talking about acquisitions. Acquisitions to be they taught me a lot about that. I guess me, even myself with Gleo, I'm not too familiar with overall like a lot of the points that you're bringing up. So definitely appreciate that, and I'll definitely have to do a little bit more research about that, because you're right.
Yeah.
It does seem like something's off.
Honestly, I mean, if you think that I'm out of my mind, because obviously it's my opinion as me being my own investor, right? So if you have a point against that, I'm not going to take offense if well, what about this, or if you counter it some other way, because I'm down to go down the numbers and sort of speculate with you, because at the end of the day, none of us are really going to know till the next coming quarters, right?
Yeah. Well, because Galeo dealt with South America, I believe, right?
Yeah, they do a lot of North and South America. Yeah.
Well, I think in general, though, they primarily are based out of Central America, right? So the trend from at least the news I've seen, do you think, I don't know, I know the transition out of COVID related environment has been really struggling for South America,
Sure.
um, with the exception possibly of Brazil, but I think there's a lot of red flags coming up. But still,
Okay.
do you think
Yeah.
that has some cause, some merit, maybe attributing factor to it?
I mean, if it is, you know, what's going to happen to Technesis, which I definitely feel like is a very, you know, Latin American company. Um, you know, I don't know. I haven't looked into it probably as much as you have. Maybe you can tell me some more, but I'm not sure. I don't know what it is, whether it's, you know, there's account growth is one thing, and then, you know, these accounts can sometimes not continuously be paying, right? An account can go dormant. And that's something weird that maybe I want to touch on really quickly. Whenever you hear Galileo talk about their members or accounts, their accounts versus Technesis, they talk about users, where, you know, a user can have multiple accounts with a certain you know, institution, right?
Yeah.
Obviously, you know, we're talking about how much they're signing up with a third party bank or something like this. But there's, I don't know if we know the numbers here, but Technesis has about 150 million users. I think that's such an incredible number that we're bringing over from, you know, just America alone, not even really expanding. You know, they're saying, I remember Anthony Noto saying that they see a lot of, you know, really good leads from Europe and these sorts of places. I think even some places in Asia as well, and that they're actually going to be going overseas with Technesis as well. But yeah, I'm not sure in terms of, you know, geologically, like you know, I'm not sure. I'm getting mixed up in my words because I don't know the answer. That's true.
That's fair.
Yeah.
A good transition, especially since you brought up Anthony earlier, about him buying. So, what's your take on that? Like, I've been investing since roughly 2009, and I've covered quite a lot of stocks, looked at a lot of stocks. I've never really
Yeah.
seen any CEO has done what he's doing. Do you think he's just crazy? Do you think he's trying to do that to revive inspiration into the stock? Do you think he's doing it for his own benefit? What's your take?
Yeah. Um, I definitely don't think it's to, you know, inspire, because I think the first time he bought, it was inspiring. You know, oh my God, the CEO is coming back and he's continuing to buy it. Now it's just becoming clockwork. I don't even think people are looking at it anymore. You know,
I'm one of
I,
those, yeah.
yeah, because it's weird. It's like how much money does he have to put into it to inspire confidence? Is it 1 million? Is it 2? Is it 3 million? You know, he continues to buy, and it doesn't seem to be changing the stock price at all. He was
Yeah.
buying at $9, it's now $5. So, you know, I don't know if it is inspiring confidence. What I think it is, you know, as the price goes down, it's cheaper and cheaper shares for him to get. And I think he's truly seeing something within the company that we just aren't seeing yet. Right.
Yeah.
And whether that is overall just insane member growth, I know, have you spoken with Cha or know who that is?
Yeah.
Yeah. So he's been showing off a lot of the, you know, growths in terms of what they're seeing in terms of app downloads and website visits and everything like this, which are just up insanely this quarter. I think it was like 44% month over month from
Yeah.
April to May. I mean, that's both Q2, but still just large growth right now. Maybe that's why he's buying. You know, maybe he sees a lot of the growth, a lot of signups. I sure know that if I was the CEO of a company and we were just having our numbers getting killed, I would not put in that purchase order. You know, you're putting in that purchase order with an extra $3.5 million. You already have a ton of shares. I'm not saying sell what you already have, but to buy extra, which is, you know, not expected from you as the CEO, to buy that much extra must mean that you have a true belief in the company, right?
Yeah.
And you're getting live updates. I'm not saying, you know, if he asked the SEC, or if the SEC asked him, he's not telling them that he's using insider information, but he sure isn't trading on bad news. You know what I mean? Like that,
Yeah.
that's at least the way I see it.
Yeah, no, that makes perfect sense. And I think in general, not necessarily just him. I think over the last 3 months, I was looking at it. It
Yeah.
said roughly about $3 million worth of actual all orders from all insiders versus I think only 200,000 versus for sales.
Yeah.
So I think just even on that regard, it's not necessarily just Anthony backing up the bus. And
Yeah. Harvey
similarly,
Schwartz, I think, has bought on a lot too. Nearly, I think like
yeah,
$1.2 million or something along these lines
I saw
in the
that.
last
Yeah.
3 months. Crazy,
Even
crazy.
myself, like I went in big on SoFi at $8 because I would have sworn that based on the technicals and everything, that was the
Yeah.
bottom. And then just the floor went out. This is where I guess maybe we can cap it off with one final thing. Again, a little bit more of a spec topic, but manipulation.
Yeah.
So I've really been watching SoFi. I've been covering it quite a lot, as has View. And I like to focus on short interest, and because that's a good indication of kind of what's happening behind the scenes, what people are kind of negatively thinking about. And there's been plenty of cases that the cost to borrow is actually negative, insinuating that brokers are paying people. I think that's just one of the many things, signs of manipulation. Similarly, like I just said, $8 I would have swore was the bottom, but then short
Yeah.
interest went from, I think it was 16 to 24, an additional roughly
Wow.
about 30 million shares being shorted in that time frame,
Yeah.
which was enough to break it below that strong support, and thus there we are.
Yeah.
What's
Yeah.
your take on manipulation? Do you think it's being manipulated? Do you think that's just people just thinking?
Honestly, this might be the bad topic for me because I don't follow it at all. Like for me, the short term side of SoFi, I really don't follow. I don't follow really many things in terms of technical analysis, and I don't know if technical analysis also plays into things like obviously short interest does, and but whether that's also insider buying and these sorts of things. That's probably the only TA that I do is whether, Anthony Noto is buying and what the, psychological side of what happens to the stock if that happens. Mainly I focus on just the growth rates. That's what I want to see. I want to see the side. Do I know if there's manipulation? Maybe. Do I care? No.
Fair enough.
But I don't think that SoFi can go bankrupt at this rate. I What really interests me in SoFi, if I could just say really quickly, because I don't want to kill that side, but I also don't know if I could even add to it of like the manipulation. But
Yeah.
what really interests me is things like their credit card growth rates. We're seeing like 500% growth rates, year over year. And this is a part like one thing that comes up with me with whenever it comes to SoFi is the ratio between lending clients to financial services clients, right? It's not great to just add a member that's going into the checking and savings, right? Comparatively to a member that goes in and gets a personal loan or potentially student loans. Obviously, we are making so much more money off that single client than we would on 10 financial services side of clients. What is really exciting is the credit card business, how much it's growing. That could seriously be a big angle for us because it's a loan style product that makes money off the balances, at interest rates anywhere between 14 to 21%, or even 22%, I think, that is placed under the financial services side of the member category, right? Plus also getting interchange fees if someone actually taps their card against the terminal.
Yeah.
Those are the things that I'm super interested in and focused on. How good is this company going to grow regardless of outside, things sort of maybe changing the stock? Because whether there is manipulation, I think the stock is way too cheap, but this should be a blessing. Like, would I rather the stock sit at $15 through this entire crash and not move? Or would I rather it go down to 5 and then back to 15? I would absolutely appreciate this crash because I'm acquiring right now. Warren Buffett talks about it all the time. Whenever his stocks crash, all he does is smile. Like, unless it's bad news. If the news was changing, if the reasons for why you bought the stock changed, then maybe sell. But if they're not, just be grateful. And I am super grateful that I can get SoFi at this rate. If everything is still in line and the growth is still coming and we're passing off 70% of the amount of interest rate increases off to the consumer, and we're only losing by that 0.3%, and then taking that bonus from the deposits that we're getting because now we're a chartered bank, that is a great system. And that's why I'm investing. and not worried about any of the sort of outlying things or the TA or anything like this. Although we do need to talk later because I do want to know just a little bit more about TA just to sort of, round out my skills. But yeah.
Yeah, that's fair to say. This is a good transition period. I just want to say, obviously, this is none of which what we said was financial advice. This is only just our own opinions. But
Yeah.
I think what Tanner and his mentality is, and how he's representing him, how he's talking, is exactly what a lot of investors need to do. Obviously, I'm like him. Myself, if I did not do YouTube channels, I would not be watching what SoFi is doing. I'd be kind of monitoring it every big news or quarterly earnings just to kind of keep it in line. But once you do your own due diligence, unless nothing fundamentally changes, there's nothing like take advantage of these prices. Similar to the way you said, that's what Anthony is doing, dollar cost average. Those are the way to do it. Have your mentality of 2025, possibly longer or forever, whatever floats your boat. That's what you should be looking at. Yes, I only bring up manipulation, those kind of hot topics, because a lot of people, like we kind of mentioned at the beginning, are very short mentality wise. They care about the next catalyst. They don't care about the previous catalyst, which I think isn't the right mentality. But again, I'm not here to judge, right? Everyone has different investing styles. I may be wrong, and you never know. I could be the one wrong in the end. You never know.
Yeah, that's also a thing too, right? Is that just saying, let let SoFi sit there and do its own thing and stop worrying about it doesn't really make for good content to watch, right? There also needs to be things in terms of talking about manipulation. I don't know anything about it. I'm not really following it. So yeah, I apologize. I wish I could add more to it, but yeah.
No, that's fair. That's fine to say to with me.
Yeah.
But with that though, I really do appreciate you, Tanner, popping on. Make sure you guys pop over. Clearly, he is very knowledgeable about SoFi and clearly the banking sector as well. So pop over there. Future investing link is in the description below. But Tanner, I really appreciate you popping on.
Thanks, buddy. I appreciate you having me.
And for those of you, don't forget to hit that thumbs up and subscribe and do all that fun stuff. But with all that said, I appreciate you guys watching.